Welcome back. We're coming up against the opening bell on this busy morning for economic data. Of course, we had that retail sales report. But first, some hot tickers on the Yahoo Finance platform. Shares of Adobe moving lower after they announced the company will acquire design software firm Figma in a deal worth about $20 billion in cash and stock. Adobe also reported third quarter earnings, beating on the bottom line and meeting revenue expectations. And you're probably seeing the stock sell off here, guys, on that deal. Usually when you see a large number like this, and most of the deal is just being financed via stock, you will tend to see the stock price of the acquiring company trade down, because by and large, it was a pretty good quarter earnings-wise for Adobe. They also came out here with better than expected guidance for the current quarter. We have not seen that at all from big-name tech companies like Adobe. But again, it looks like Adobe taking out, I would say, an up-and-coming rival to its business in Figma for a large price tag.
Yeah, Figma touts for itself. Gross margins of approximately 90% as laid out, particularly in this release that had been put out between the companies. They've got positive operating cash flows, efficient, high-growth business here. And you want to talk about TAM? Well, yeah, they've got about a $16.5 billion market that they're addressing, looking to address by 2025. And for the deal, it's going to be kind of half cash, half stock, to your point there a moment ago. 6 million additional restricted stock units going to be granted to the Figma CEO. So quite the come up here for them.
Well, and in terms of what they're paying for this company, I'm seeing some early analyst reaction here. Bloomberg Intelligence says the deal appears extremely expensive, given the annual recurring revenue of the target company is only $200 million, although, quote, it may improve the overall functionality of Adobe's creative cloud business. Over at Vital Knowledge, they're saying Adobe's spending a lot of money to expand its annual run rate by 3%. But to be fair, Figma's ARR is growing quickly. So some sort of, yes, it's expensive, but it sounds like there could be some rewards from making this acquisition, is what the analysts early blush here seem to be saying.
Yeah, for the current quarter, I'll just note back on guidance. Looks like Adobe's looking for $3.50 a share. And right now I'm on the Yahoo Finance page, the analyst section, where we compile a lot of our earnings estimates. The street was only looking at $3.45. So a nice 5-cent beat there versus estimates for the current quarter. Again, something we're not hearing from about anywhere else in tech.
I mean, within so many of the suite offerings that we've seen kind of acquisitions be prominent for over the past year and 2 years, really, looking for these deal-making opportunities when some of the private companies as well are also just looking for that additional cash and funding to come their way to sustain their own operations. I mean, this is a great deal for Figma, but then at the same time, you wonder at what growth rate Adobe actually looks for this to be accretive to their business, given that there is that scrutiny about whether or not it was truly more expensive than they should have paid at the end of the day, too.
Right, definitely.